Oil is doing something Wall Street can't ignore before the opening bell. It is taking pressure off the inflation trade just as stocks try to reopen higher after the long holiday weekend. The thesis is simple. This morning's rally is less about euphoria and more about liquidity breathing room. When crude falls, the market immediately starts asking whether the Fed has less reason to tighten, whether consumers get relief, and whether growth stocks can stretch a little further. Price is the surface. The message underneath is that risk appetite is being rebuilt through cheaper energy. Over the weekend, OPEC Plus agreed to raise output again for August, while shipping through the Strait of Hormuz is gradually recovering. That combination pushed crude lower and gave US futures a cleaner setup before the cash market opens. The Nasdaq is getting the most attention because chip and AI names are trying to recover after recent pressure, and the market is heading into a week where Fed minutes, services data, and early earnings can either confirm the relief trade or break it. This is why American investors need to understand the oil move before the open. It changes the inflation narrative right when Wall Street is trying to price the next leg. However, this is not a clean green light. A lower oil price helps the headline inflation story, but it also raises a different question. Is supply improving because risk is fading, or is demand softer than the market wants to admit? Wall Street is treating the drop like a release valve, not a victory lap. If yields stay calm and the dollar does not squeeze risk assets, tech can breathe. If the macro data turns hot or earnings disappoint, the same rally can become fragile very quickly. The mistake retail investors may make this morning is assuming that rising futures mean the market is suddenly safe. What is really happening is a repricing of pressure. Energy pressure is lower, Fed pressure may be lighter, and AI stocks are being given another chance to prove that the trade is not just momentum. But markets do not reward narratives forever. They reward liquidity, earnings, and confirmation. So the takeaway from the calm metrics is not to chase the headline. Watch whether falling oil actually pulls down inflation anxiety, whether the 10-year yield confirms the relief, and whether Nasdaq leadership broadens beyond a few crowded AI names. Bitcoin holding above key levels adds to the risk-on mood, but the main signal this morning is still energy moving back into the center of the macro story. If oil stays calm, Wall Street gets room to breathe. If oil reverses, the market's confidence may look much thinner than the opening bell suggests.